Hello to everyone watching on YouTube and listening on Spotify. It's another episode of NRG Insights. For those that don't know, this is a financial services podcast that speaks to influential people on the market, whether that be broking or lending or any kind of ancillary products, and just get their take on the market. So today I've got Stephen Johnson from 9Y Capital. Thanks for joining me, Stephen.
Hi, Marcus. Thanks for having me.
Now, our paths have crossed many moons ago when we spoke the other day. But we'll go through that in a minute. But if you, for those that don't know you, could you tell us about your financial services journey to get you where you are now at 9Y?
Sure. So I started in professional services and qualified as a chartered accountant at the end of the 1990s, end of the 1990s actually. So sort of started my career in sort of accountancy practice, and then sort of in my mid-20s, my father had a pretty distinguished career in specialty mortgage lending, and he was very entrepreneurial, and he was all quite keen for us to sort of work in business together. So once I'd qualified, he managed to sell one of his kind of mortgage businesses and was looking at doing new property lending, setting up new businesses. So we kind of joined forces together with some other people and went on a bit of a journey building new specialty property lenders, really. So the first one was a business called Commercial First, which took the residential mortgage model and tried to apply it to SMEs, so lending long-term for kind of owner-occupiers running businesses out of kind of commercial property, basically. So we used kind of wholesale finance to fund that, centralized operations, brokers to distribute the loans. And we kind of ended up writing about 2.5 billion, I think, in that business, pioneered securitisation for that type of asset. Because
it was, for people not in that background, it was genuinely pioneering, wasn't it? It was like, it was
a really interesting business, because when we started, principally my dad at the time couldn't do resi mortgages anymore because of non-competes, but thought there was a gap in sort of commercial property lending. So we sort of took the resi model and applied it. Now, the interesting thing about that was, like, people borrowing commercial mortgage lending would always go to the high street, and the high street would obviously be fairly sort of vanilla in its appetite and reasonably slow to deliver. But when we came along, a lot of the banks not only knew that there'd be an option outside of a bank for a commercial mortgage. So that was one obstacle. Then we'd go to the brokers who, to be frank, were making fortunes in resi mortgages. And the commercial was like quite hard work, like more complexity around the properties, more complexity.
It's nuts how that's flipped now, isn't it?
Yeah, it is very different now. But back then, trying to switch brokers on was kind of hard because they were doing so well in the vanilla, more like the easy resi stuff. So that was quite, for those two reasons, it was quite pioneering. But yeah, we got good traction, and we sort of derived a meaningful amount of business. So that sort of led me up to my first crisis, which was the GFC, General Financial Crisis, credit crunch, call it what you will, the Big Short, which my kids have watched during their A-levels now, actually. Made me watch the other day, and it gave me PTSD, if I'm being honest.
Yeah, you're obviously going, oh yeah,
I was like, oh my God. Yeah. So
it was a tough. We talked about this the other day, wasn't it? Like, and it sounds a bit like we weren't in Vietnam, but we talked about the people that were in, like when they're saying, COVID was similar and that kind of thing, and it's feel like you really want to say to people, if you don't know, you weren't there, but like if you weren't there, you have no idea about how tough it was, because money just disappeared, didn't it? And we all had a relatively good time with it before.
Yeah, I mean, look, the financial system was like minutes, hours away from collapse, where the ATMs were never going to work on the high street, and then you get kind of civil unrest and chaos. So yeah, I mean, it was scary times, but that's sort of that affected the Commercial First business, because we used to borrow money from the wholesale markets, we used to securitize, so like that disappeared literally. Not overnight, but in the course of 3 to 6 months, those markets completely seized, and so we then spent a period kind of collecting out mortgages. By that point, Lloyds Bank had become a shareholder, so we were fortunate that they sort of supported us through some of the collection activity, and then we had an opportunity.
It was a tough time, wasn't it, going from like the business it was into basically collections, basically like just managing the book.
Yeah, very difficult. Yeah, very difficult. But I think I look
I'm going
back
to give
at,
you PTSD again now. Look, I
no,
keep
no,
talking
no,
about it.
no, no. But I think, generally in life, in business, you have peaks and troughs, highs and lows. You've got to be resilient. And, we
Yeah.
look back and, definitely the early part of my career was kind of very positive and, it was good times in the market. And, you've just got to realize that enjoy those times when you have them, not get carried away with them. And because there are plenty of difficult times where you have to sort of show resilience. So, yeah, that was tough. And we went from, I always remember now, actually, we went from sort of 240 staff to about 85. I can still remember sitting in my office when the kind of communication went around about who we were able to retain and who we had to let go. And yeah, it's a brutal experience, really. So those things do stick with you. But we sort of carried on. We supported, worked through the loan book, which was good. And then we had the chance to join a private equity business who had acquired a banking license in sort of 2010. So coming out of the back of the crisis, you couldn't really set up a new bank. But at the time, the wholesale markets were all shut. So if you wanted to be a specialty lender, you really needed retail deposits.
Yeah.
So we had this opportunity to work with a team who bought the bank, but didn't really have a balance sheet. So we pivoted the business into sort of the banking environment, really. So the next sort of leg of my career was doing kind of specialty property lending, but in a banking environment.
Yeah.
So got exposed to sort of savings side and the retail deposit side of a business. And that was, it was a great period. So I ran the property business at the bank, which was rebranded Shawbrook in early 2011.
Yeah. Obviously, everyone now will know Shawbrook as the kind of the monster it is, but
So I wrote the first loan on the balance sheet. I remember because it was like a fish and chip shop with a couple of flats above it in Wales. So I always remember that. And we sort of pivoted the business more towards residential investment because it was better from a capital perspective. Also at the time, interest rates were super low, and landlords, it was a great time for landlords because debt was cheap and the rents were good. So we did a lot of buy-to-let, did bridging, development finance. We did some commercial, but it was more investment property rather than the owner-occupied type of lending that we'd done.
no one had any decent accounts to show at that time to do any owner-occupied.
No, so it was definitely a pivot towards kind of the professional investor market rather than the sort of owner-managed SMEs that we did in sort of commercial burst. Yeah. So it kind of was there through its growth. We bought some businesses. We then floated the business in 2015. So I was part of the executive team that did a float, going around New York, pitching sort of a.
How was that? Because there's things you don't know until you do it, right? I always talk to people about the float or like having to go and get equity in. Like you're all new, you know what I mean? Like until you've done something, you don't know what you're doing, do you? So is it like is someone leading the way on it? But I mean, it's a great learning experience. Right?
Yeah, no, super. Yeah, I was very fortunate to sort of be able to do that. Really, there was a great sort of executive team. We had a brilliant shareholder and excellent investment bankers who kind of guide you through it, right? I mean, they're obviously experts of that, and so you're sort of along for the ride. You are pitching. Basically, is what you're doing. You're going around seeing investors and trying to educate and get across, the business model, why it exists, why it can endure, why it's a good investment ultimately, Marcus. So you're kind of on a bit of just a selling roadshow, really. I mean, it was a brilliant. I remember we were sitting with my CEO at the time, and we were pitching someone at the top of one of these big skyscrapers in New York, which I'd never really been to before. And out the window, it was like a snowy day, and out the window on top of this building was a sign on top of it which said Essex House, and obviously the colour Shawbrook are not invested in Essex. So I think this is bizarre. This is like meant to be. So I can't remember whether that investor bought shares or not, but I think at the time,
they did. That would make a good story. They're the ones.
So that was obviously great. And then I was on the board for a period as a public company, which is interesting. Very different, having really been in sort of more sort of startup specialty lending businesses to then be kind of a director of a PLC was a bit different.
Does the mentality have to change when you go from that? Because it's still the same business, right? It's just has more shareholders. Is there a change in like the corporateness of a business when you flip that, or the mentality?
Yeah, I think inevitably. I mean, like all businesses that grow, whether you become a public company or not, I guess as you go through those growth phases, you kind of need to institutionalize a little bit, even though maybe the reason you started was to be like more innovative and more fleet of foot than the institutions. You invariably become a little bit more institutionalized. And I think in a public company, obviously you've got even more layers, because at the time, the small challenger bank community was still quite new. So there was a lot to do to get confidence. And obviously the regulator was figuring out how that community of smaller bank lenders would fit in the market and how they did things. So there was a sort of a pressure from a public company being fast paced and growing, and sort of regulator just figuring out, it's not used to seeing small banks. It was, the UK was very much a sort of five bank market. In America, it's thousands of banks. So it was quite a different, so that was definitely, I found it sort of different. You kind of drift further and further away from customers and deals and more into sort of internal strategic stuff, really, I guess. So did that through to 2017. Company was then taken private. So Shawbrook was taken off the market. In between floating and coming off, we'd been through Brexit, which was obviously a dramatic change to sort of like another crisis. And then I sort of left that business in 2018. Spent a year doing some of my own property investing and developing. I've always been lending to clients doing it, and had some capital. So did some projects, bought some HMOs, converted them, and then did some developments as well. So that was quite interesting. But it's not really a business. It's more kind of an investment type thing. Yeah. And, I enjoy business, being busy, growing businesses. So in 19, started a small boutique brokerage and lender. So business is called Finance.
Had you ever been on the brokerage side before? Was that relatively?
No.
I mean, obviously you've been dealing with brokers your whole life, but
well,
this is the thing.
Yeah, this is the thing. I mean, the reason we did it principally was because we'd been in sort of the bank for quite a while. I joined with my business partner, now a lady called Karen Bennett, who I'd worked with for 25 years, back from the commercial first days. And we were so far away a little bit from the market because it was such a big business. It was quite hard to figure out, where was the market, where are the opportunities, what should we do? So we thought being a broker for a period would give us good, I guess, access to the market, assess where the lenders were, where we thought the gaps were. That's the reason why we decided to sort of broker for a period. And then I did find it interesting because I thought, well, we were very broker friendly. Our whole businesses had always been about the broker channel. I thought we really understood what that meant and what brokers faced. But doing it just highlighted how little I really did understand. So walking a mile in their shoes was really eye-opening. In terms of how other lenders, like interacting with other lenders and being, and seeing how they sort of did stuff, sort of took the blinkers off, really, because I guess having been a lender for so long, brokers tell you this lender does that really well, this lender does that really well, you're rubbish at this, but they're great at that.
Seeing it firsthand, right? It's massive.
So I did think, well, I know a lot more now than I thought I did. And then also the challenges that brokers face in terms of trying to manage customers. A lot of times a lender, if deals aren't progressing or they're sort of slow, you think the broker's not doing their job, whereas the reality often is that the customer on the other end of the broker is like...
The reality is this, it's the lawyer. We all blame the lawyer. It's the easiest solution.
Let's leave them out of it. So it was interesting. I found it hard. I felt like you were the meat in the sandwich as a broker, in that you didn't control the lending decision and you didn't control the customer, and you're constantly trying to sort of serve two masters, really, ultimately. So, and then we sort of did that for long enough to sort of figure out where we thought we could build a lending proposition. So we started doing, bridging and refurbishment and a little bit of development lending in sort of 2019, and I've sort of been doing that ever since, really, in a more smaller sort of boutique way.
So what the like feeling wise, like even getting up and going to work, the difference between building something like a big monster, floating, that kind of thing, to going to work for yourself now, like being part of small. What's the difference? What kind of what gets you out of bed?
It's a really good point. I enjoy work generally. I I think I found when the businesses got big and quite institutionalized, I found that looked slightly more draining. I think from, why would I say that? I guess in a smaller business, you know, you're not having to deal with so many people all the time, so many cultural changes, so many sort of
less politics.
Yeah, definitely less politics. And I was kind of not very good at politics because I've always been in businesses that have grown from small, where you've kind of got, you know, in my experience, you know, we've been very lucky to have great people and a good culture, and it's sort of taken us a long way. And that, you know, as you get big, you sort of get away from that, and you kind of get lost in sort of more institutional stuff and politics. So being in a smaller business is great because you don't get, you know, you don't have to deal with that. Downsides are, you know, you don't really have a lot of resources. So whereas before, I was kind of fortunate enough to sort of, if I had an idea or wanted to do something, there was an army of people to ask to do it for me. Now you kind of got to do it yourself. So that's sort of like the slightly downside, but much closer to clients, much closer to projects, and therefore you feel like you're productive in your day, really, rather than sometimes I think in a bigger business you feel like all you've done is complete a series of meetings, I don't know, done some more presentations, some more PowerPoints, talked around issues.
Everything you does now have some sort of effect on your business, doesn't it?
Yeah.
You know, I suppose, like you said, you're in a bigger business, you think, what have I achieved today or this week?
Yeah.
Do you know, with everything you do now has a substantial difference to the business, isn't it?
Yeah, so I think that's the main difference. And yeah, I definitely kind of, my days go quick and I enjoy them. So that's a good thing, I think.
Nice. And so how do you, I mean, I obviously ask this to all, like bridging and dev is tough, right? You've got 240 competitors. When you went into the market, did you have, that's not including all the family money, etc. But did you have an idea of like where you fitted in the market, or was it just through the broking side of things where you started to look at it and go, actually, this is missing?
Yeah, I think we've sort of always tried to sort of find an opportunity in the market with a proposition that can work. I mean, that doesn't last that long though, because really, if you think about what we do, I mean, money is the ultimate commodity, Marcus. You know, ultimately everyone's money is really the same.
Yeah.
So sort of figuring out where, you know, there might be gaps in the market that you can serve, that gives you a bit of an opportunity. But before long, people will see what you're doing and it gets copied. Yeah, really. Yeah. So I think, you know, we do have some strong ideas about how to do this business. And a lot of it's born out of our time at, certainly in a bigger bank like Shawbrook, which was a brilliant business. But Karen and I would often say there are things that we wish we could have done in that business that was just too big to be able to do. So a lot of that has influenced our desire and with 9Y. And I guess if I was to summarize it, you know, we want to be competitive on price because at the end of the day, you know, you can't, you have to be in the market. So that you have to be in the market. You don't have to lead the market because it isn't a price-led proposition, but you have to be competitive. I think we're a little bit more punchy on kind of leverage because at the end of the day, clients want to make their money work as hard as they can. So we try to figure out where can we take our risk to help clients sweat their own money. But then thirdly, we want to kind of be the best at executing really, and combine some commercial acumen because we've done it for a long time so that we can kind of, when we're dealing with clients, they realize that, maybe we've got some experience ourselves of investing and developing, and we can make some good, sensible decisions, and we can kind of really execute with confidence. And I think that's the last part.
Do you find that makes a difference actually when you can speak the language of developers?
Yeah, massively. So we would always speak to our clients early in the process. Now, obviously, we get opportunities to quote on deals, or structure a loan, quote a loan. And if that's kind of workable, then the first step for us is to jump on a call with the client. Because we'd like to introduce ourselves, our background, and hopefully get some confidence, give the client some confidence that we know what we're doing, and we're a good partner to work with. Equally, we can then iron out the deal and make sure we fully understand it, probe around stuff that's not clear, and try and basically clear up anything early so that we can decide at that point, look, is this a deal for us, right? The diligence needs to stack up with reports and stuff, but basically that first call is, we like the client, we like their background, we like the deal, we want to do it. So therefore, let's execute the loan. Let's not spend like 8 weeks deciding whether we want to do it, which, to be frank, happens in most lenders. deals go through a journey. Different people look at it at different points, and different people have different opinions. Whereas as a customer, that's a shit journey, to be candid, without a swear.
4 different credit committees.
And it's like, this is what I found quite interesting, is that when you're in these bigger lenders, you do lose sight. I know it's cliche, but you lose sight of the customer just because you're not faced into them. You're constantly looking internally at your own operational challenges and targets, and you can't help but end up building stuff that suits you, doesn't necessarily suit the customer. So for that reason, we're trying to do things the other way. And it's a mindset change that says, look, we're all on board, so we want to do the deal unless something comes out which means we can't, rather than actually let's just kind of keep going and see if we fancy it, if you see what I mean.
They do get dragged out, don't they? But then that's the process in the big business, isn't it? There's layers and layers, whereas you can actually look at it.
The way I liken it to, it's like a factory. It's like a production line, right? In a bigger lender, it goes down the production line and lots of different workers are kind of engaging. And it's like, well, that's, whereas we like to try to be a bit different in that you get continuity, and early on you get a good steer. And it's also a mindset change, Marcus, in that, like, if you don't want to do a loan, you'll find a reason, right? There's always a reason. So we try to get back to the point that we're quite client orientated. So we lend to good clients that have got a decent track record and that are backable. It's a little bit old fashioned, a little bit old school, a bit like the banking days. So that early call helps us with that. And then we're like, we like the client, so we want to back them. The project looks okay. So, right, we want to lend. So let's go with that mindset rather than, trying to figure out where's there something, because there'll always be something that you can look at and go, well, that's a reason not to do it. So anyway, that's sort of
on that point. Actually, I don't know how open you can be about this, but like obviously we look at the asset, and the asset's good, and then you look at the client, even if their track record is okay. What is it that puts lenders off clients, if you like, when you're having that kind of client interaction that because it's not relevant to the asset, right? If it was a different client, you would look at it. What is it that you do? Because it's a gut thing. Because on paper, I don't think they'd even get through to that stage. Do you know what I mean? If it wasn't something you'd be interested in.
It's very interesting, Marcus, actually, because there'll be instances where on the face of it, it looks like really strong, and you do the call and then actually changes your mind. You don't want to do it. But more often than not, I've found where it might be marginal on paper, but with the benefit of the client interview, it becomes, you become completely on board. Yeah, definitely. Yeah. And I think a lot of it is.
Is it more that way than the other?
Yeah, it is. It is more that way. And I think sometimes I find that the client can present, comes across genuine, they give you the background to the project, which often hasn't been communicated before. They can start to show you, like, how much have they thought about this? How much work have they done? Do they really know their local market?
Yeah.
Have they done?
I suppose when you see a deal, say you see a deal from a broker, you might, depending on how good the broker is, and there's some amazing ones in the market and not so amazing. You're not getting the same amount of info from everyone, are you? It's always
But I would also say, no, you're not. I mean, there are definitely some brokers that do a good job of presenting the picture, and I would say that story is really important. But even then, it's hard for that to come alive from a bit of paper. I think in a call, like half an hour call with a client, right? Tell me about yourself. How did this project come about? Why do you like it? What are the challenges? What's the downsides? When you start probing like that, you can quite often, clients can fall into two camps. Those that you can clearly have thought about everything, can have a really sensible plan, and those that fall over because they're not really back.
Yeah, you bringing it up as the first time they thought about it.
Yeah,
that's worrying.
it's a bit of that. So it's quite binary, really. But I guess for us that process is really important, and I think it's a bit different. I'm not sure. I mean, some people probably do it as much as we do, but
I also, with that, Stephen, sorry to jump in. What point do you get to where you physically? I had this conversation with someone the other day about the size of your loan book. What point do you get to where you physically cannot do that anymore?
Yeah,
some people say they want to meet every client, but is it possible forever?
I mean, I guess since we left Shawbrook in the smaller lending kind of setup, we've done nearly 240 million of lending. So, I mean, it is a lot of effort up front, but what we do find is that for us, we're quite keen to sort of build ongoing relationships with clients. So the more you do it, and you work out kind of a core of clients that, you know, hopefully perform for us, we perform for them, then you get kind of a good flow of forward business. And that's quite efficient to originate, to be candid, because you've done all that sort of initial work. So you already bought into the client.
You already know the client,
So that bit you then really got to do again. Then you just focus on the project itself, and, you know, is there anything in that that's sort of that you know you're not happy with? But so it's a lot of work, but you do get sort of, I think, a much better opportunity to sort of do follow-on lending, really, and that can help you grow and scale. So that's kind of really why we do it.
That makes sense. You can see the benefit of it later on, like you say, when you're seeing the same people, and that's the best business as well, right? Is your repeat business.
Yeah, definitely. And that's kind of central really to our sort of plans. And we try to behave, Marcus, like that. So we try to say to clients that we are a relationship lender. We're not really a transactional lender. Look, don't get me wrong. Are there clients you've lent to that we only lent to once? Yeah. Of course there are. But we sort of are trying to build something a bit more, sort of a bit deeper than that. And therefore we
That also means it doesn't rely on price all the time as well, doesn't it?
Yeah.
You know, only one person can be the cheapest. So actually, if you build that great relationship, that's amazing, isn't it? Because
we've got to be competitive, because you can't sort of trade off that, right? I mean, at the end of the day,
we did a great job for you. Go charge them all.
I mean, like everything these days for investors and developers, costs are really high everywhere. So you've got to sort of, you know, do your best to try to minimize those and be efficient. I think we say to clients, look, we try to do things on the way through a loan with a view to working with you on ongoing, rather than to optimize or maximize any income just out of this one loan. So that's sort of a bit of a different mindset, I think. And again, that's it. And that carries on, Marcus, with like in the life of a loan, what I think a lot of clients sometimes, then they do realize it when they've had a bad experience, is actually like how the lender behaves with you and works with you during a project is.
Do you know, it's a really good point, because it's easy when it's easy.
Yeah.
You know, it's how you act when it goes.
Exactly.
Inevitably as well, right? Things go wrong, don't they? You're always going to have to deal with that stuff.
Oh, you know, invariably there's bumps in the road. Hopefully there's no craters, but there's definitely bumps. And we've had examples. I had a really good client that we've done maybe 10, 11 deals for now. He phoned me quite early on in our life to say, I've got a bit of a problem. So you're like, that's always a bad start to the conversation, but I've got a solution. So that's always a bit helpful to hear that. Anyway, interesting story. So he was doing a big HMO conversion, and then he turned up for one of his projects, and his contractor was putting up the bricks at the back of the house, but the wrong bricks. So the building supplies guy had bought the bricks. They're supposed to be red, they're yellow. And the contractor just, rather than wait for 2 or 3 weeks, he just put the yellow ones up. And we're like, well, that's not really like your plans and your planning. So it's technically in breach, possibly. Looked at it, and the whole back road, on all of the road, all different mixed matches of different. It's not a conservation area. There's loads.
I want red.
Yeah, it sort of was all a bit of a mishmash anyway. So we're thinking, well, to be honest, it doesn't really stand out. It was just the rear elevation and the side, and it was very narrow, so you couldn't really see the contrast with the red brick.
Right.
Sort of said, well, okay, what happens if you get an enforcement notice? What would you do? And it's like, yeah, I've thought about that. I can stain the bricks a colour. It will cost me like $5,000. So we're like, okay, there's a plan. So let's carry on. Let's not draw stop, because obviously the other thing you could do is go, you're not building in line with the plan, so stop, everything stop. But that's obviously
It's funny. I actually saw one of those vans the other day, brick dyeing business, and I thought, how much business can you actually get from a brick dyeing? It's a proper business. There's a fair amount, especially with how stringent they are on keeping everything the same.
Yeah, I didn't even know you could do it. So so that scenario is a good example where we say, right, okay, that's fine. We've got a fallback position. Let's carry on. And if that's what it comes to, then we can deal with it then. And so I think things like that, it's quite hard when a client's trying to do a deal. They don't really think like, what could life be like with this lender once I'm into the project? But there's a few stories, I think, a few clients who would tell you that they've had bad experience with lenders who aren't easy to deal with, either, you know, because they spent all their time talking to someone at the lender while they're doing the deal. And then as soon as they do the deal, somebody else is dealing with them on the project. And they're like, now I've got to re-educate someone on what I'm actually trying to do. And there's no continuity of sort of knowledge. So that can be a problem. And then also if the lenders just aren't very efficient and aren't very good at the drawdown and just get very picky, then you can end up causing a problem. So,
Well, that learning. So as you grow, I mean, I don't know what you can tell me like plans wise. Where do you see yourself in the market at what level? Like, is there a comfort where you go, this is what we want, this is a great business, this is where we want to get to, or are you just going to just keep going?
It's a really good question. I think, look, as owners, Karen and I, as kind of owners of the business, would like to be a meaningful business, right? I think everybody kind of wants that. We don't have external investment or sort of private equity, so we haven't got someone saying, right, you need to have achieved this by then, and look, you know, our money's in.
200 million out the door tomorrow, and you're like, that's where bad decisions are made.
Yeah, I've had that, you know, like everyone, probably a lot of people have had that experience where, you know, you're under pressure because you've taken external kind of capital, and we don't need to do that. So we're like, let's grow organically. If the market's good, if we can scale the business, which comes down to a lot of time finding really good people, and to be honest, and the human capital side of it.
That is a tough gig.
Hey, you got to have the right people. This feels like he could be quite helpful for you. And yeah, so I think like find good people, continue to invest in the business, grow. But if we don't think the opportunities there, if we don't think the market conditions are there, or if we can't find the right people, we don't have to sort of grow, if you see what I mean.
I suppose without putting that external pressure on yourself, again, as it like having to answer to someone, it also means you can continue making the decisions that you want as well, right?
I think so.
There's not money burning a hole in your pocket where you start to slip on your standards.
No, I think we're ambitious, and we've also, in our careers, we've always been in businesses that are fast growing and grow, and, you know, so that creates sort of a sense of sort of success if you're sort of fast paced and fast growing, although that's not always sensible, because it's more about profit sustainability rather than volume and vanity. But look, we're passionate about our business. We like to scale it, but we'll kind of do that organically, really.
Sensibly.
And that's sort of.
Is it not tempting, because both of you guys have come from like a bigger animal, like, you know how they run, you've seen it, because there's not many people that own small businesses that have worked at board level in big businesses, so you'll see things that possibly those guys haven't. It must be a little bit tempting to go, oh yeah, we know how to do that.
There is always that bit that sort of says, right, should we really, you know, should we be a lot more aggressive and a lot more ambitious, a lot quicker? I think, but maybe back to my sort of accountancy foundations, and probably just also a little bit of my own personality, in that I'd quite like to sort of build from sort of sensibly and profitably, rather than bet on it coming good and then like getting really, really heavy on cost, and find that, you know, you're chasing all the time just to try and cover your cost. And then often, like during my career, I've seen this during the cycle where people ultimately are betting that someone will come along maybe and invest in their business or buy their business before they sort of run out of road. It's a big bet. And fortunately, you sort of don't have to make that bet. So I think we'd like to do things just a little bit more organically, but equally we are still ambitious and would like to scale the business as well. This comes back to that point about it being meaningful, really, as well. So, you know, this year
so what would you say? I mean, obviously this is your business now, right? So it's difficult for it to be anything else. But what's more exciting, like the fact that you're in it every day? Because building the big business was cool, wasn't it? But you are a piece of the machine. Like, whereas you are the machine now. Is it just a different excitement, or is one like, no, this is much cooler? Like, I enjoy this.
Yeah, I think there's, as I said, I think there's times where you can get caught up in the vanity of growth. You know, where. You know, it's a benchmark of success, isn't it? You know, like, how big are you? How many staff you got? How much lending you're doing? How big's the balance?
I don't know why people ask how. Like, no one ever asks you your profit, but everyone will ask you how many staff you've got.
It's
nuts, isn't it? The benchmark of success is staff. When actually I go, well, I made no money when I had 15, and now I've got 8. I'm all right. I think it doesn't make any sense.
So I think that is always something you're fighting against as a business owner, maybe thinking like you're not so relevant unless you're big.
And ego as well, right? Like, we want to do well.
Yeah. So, but equally, I think certainly through my Shawbrook journey, like our shareholder in that business was super smart and very, an amazing asset manager, and instilled, I think, in me a lot, and the other team, just the financial foundations of a business and how to. So I think that has stuck with me, really, about like really understanding the profitability of a business and is it viable, and I think when you do get in a big business, sometimes you can lose sight of that because you're just hitting another benchmark that someone's set for you. And it's normally an origination target. But that's all well and good, but do you make any money? So,
yeah, can we get it back?
that's always
It's the joy.
So,
On that, obviously you clearly had some amazing mentors in your life, one with your dad in your early career, and obviously the people you're talking about at Shawbrook. Has that made a difference to you? Like as you move forward, is it important to you to pass that on and that kind of thing? Have you thought about it? Is it part of it?
It's a good question. I have been very fortunate with the people I've worked with in my career, and brilliant people. So like working with my dad's interesting because we were quite different personalities. He was a self-made guy, son of a docker, just had 30 years of people person, had so much charisma. Now people still talk about him all the time, even though he sort of passed away 12, 13 years ago now, and his influence on the market. He was very intuitive, quick. I was more kind of analytical, probably because of my accounting background. I'd want to do lots of analysis and then find out that he was probably right anyway, which basically was what my experience, and I find that quite frustrating. So we were quite different, but I'd try and sort of learn whatever I could from him and what he'd achieved, which was amazing. And then I worked with a guy, Philip George, who my dad brought in, who'd been in First National, which was again one of the businesses that all of the alumni of First National went on to do amazing things in lots of different lenders. And he was a great foil for my dad because he was a bit more institutional and a lot more corporate kind of background, but although still very entrepreneurial.
I've reined him in a bit on the entrepreneurialism.
And then so he was so Philip, I definitely learned a huge amount from Philip. And then when we set Commercial First up, there was a chap called Martin Feingold, who was again a pioneer of securitizing mortgage lending in the UK, Goldman Sachs banker from the US who brought the model over. He was he taught me loads about securitization. I'll always remember being in a meeting early on, actually. So he and my dad were the pioneers behind Commercial First, and we had an early meeting, and I was new into the industry. And we sat around the table, and Martin says, right, you get this great loan that comes in to you. It's a low loan to value, good client, but it's outside of lending policy by this and this. So what do you do? So my dad's like, well, you write it, obviously, don't you? And Martin's like, no, you don't write it, because it doesn't fit the securitization budget. But I was looking at these two brilliant guys who both had brilliant careers, but were historically competitors. And I was thinking, this could be fun. So someone like a Marty, who sadly has passed away as well, people like that. And then through my Shawbrook journey, the sort of shareholder in particular and the shareholders team were just brilliant people and super successful. So analytical and financially astute and also determined. So we obviously floated Shawbrook, and they floated it again recently. And, my experience of those guys is very much look, we understand what people are telling us in the market, that things can or can't be done, but almost ignoring it and saying, look, no, I have a resilience of belief and confidence, and I'm not just going to accept what you tell me. I'm going to...
It's really tough to do, isn't it? Like that, because the market is the market. You know what I mean? To be pioneering in anything is tough, because you're basically saying, I don't agree with everyone else. That's a lot on their shoulders, like your dad did with commercial, and people have done previously with resi and stuff. It's a big jump to go, actually, no, I see this. I was talking to a broker earlier on, a very successful commercial broker who's come on the podcast, and it's a similar thing. They had they on the other side of it, where it just wasn't working, 2008, and he was in debt and he struggled, and he was saying if you just believe in it now, and they've just sold for a good figure, and I was like, it must be so hard to just not just go with the status quo. Do you know what I mean? Then just go, no, I believe in this.
Definitely resilience, but also just not accepting the answer if it's not the answer you want. If you want almost that sort of stubbornness of mind to say, look, because rather than just get turned away at the first sort of knockback or the first sign of an obstacle, it's just having that drive to sort of say, well, I'm not accepting that. I'm going to keep going. I'm going to keep going. I'm going to pivot a bit or just find a way, really. So that sort of really stuck with me, as well as all the sort of financial engineering brilliance and
It's quite nice. Quite a nice grounding for amazing people in that.
Yeah.
So sorry, I've just looked at the clocks and I told you, didn't I? I said it'd be 20 minutes and it's been 40.
Oh, yeah.
But it is genuinely interesting, especially because you've done so much in the industry, you know. And actually, I speak to a lot of small businesses who have come from maybe broking or that kind of thing, but not many who have been board member level in PLCs or seen businesses grow to that level and then set up on their own. So it's really good to get that conversation where you just come at it from a very different angle. So genuinely appreciate your time today. Sorry, it's gone over double what I said it was. Obviously, all your socials will be on our socials. If people don't know you want to talk about you or want to talk about the business, obviously, you know, this goes out to a lot of brokers as well. What's the best ways of getting hold of you?
Sort of LinkedIn messages or like the website, which is 9Y and then cap.co.uk. Anyone can kind of contact us through the website there. And yeah, happy to look at opportunities and start conversations. And thanks for giving me the chance to talk a lot today.
No problem at all. No, it's a genuine pleasure. And thank you everyone watching and listening. It's been another episode of NRG Insights, but I appreciate your time, Stephen. Thanks very much for that.
My pleasure. Thanks, Marcus.
Cheers. Bye.